Hello, everybody. Welcome to Tuesday. The S&P 500 was down 0.01% today, just barely down. What's actually an accomplishment. The Dow Jones ended up today, but all the indexes were down a fair amount today after we got some really good economic reports. So retail sales were much higher than expected, and industrial production was higher than expected. And so normally these are good things. It was kind of that good news is bad news environment where, of course, with better economic production, you get a situation where the Federal Reserve might be raising rates. And so we now have a 60% bet that they'll raise rates in the January meeting. That wasn't there before these particular numbers came out. So we're still in that kind of soft landing area. We're still having, some, rate increases that maybe could cause a recession on one side, and we have, all of this economic strength on the other side that's kind of keeping us out of that recession, and we're kind of just rolling right down the middle. Chairman Powell, when this first started, to his credit, with the Federal Reserve, said, hey, we're going to have a soft landing. In his opinion, could work here, especially since the job market was so strong. So far, so good. Market finally got around to coming back up and recovered. Pretty big reversal today, which is kind of interesting to see as far as that goes also. So not a bad day altogether. Definitely looking forward to seeing what's going to be happening here. We're still holding up above 4,300. We've broken back, off of that nice trend line that we established really starting back last October, more than a year ago. So things are still in place, still moving along. Our signals did change for the bond market. We moved from green on the fast signal to red today. Just means in this particular case, we'll be moving into T-bills again for those IRA type of accounts. Again, these types of hot economic projections, scare the bond market into thinking that we're going to have higher interest rates. And when the rates go up, the value of bonds go down. And so we get more defensive in that environment. So we'll see how this plays out. But anyway, look forward to seeing you again tomorrow. Thank you very much.